Hello, in this presentation we will enter a transaction to pay payroll taxes into our bookkeeping problem in Excel, keeping in mind how that same information might be input into accounting software such as QuickBooks. If you would like more information about the QuickBooks Pro, take a look at our comprehensive course in the link below. We're first going to take a quick look at QuickBooks and then jump back to Excel and enter the data there. When considering QuickBooks, we are looking at the Employees section of the home page, and they provide this nice little item here that will help us to manage the payroll liabilities, meaning pay the payroll taxes. It's important to note that when we're talking about payroll taxes, in theory, they're all going to be somewhat the same in that we're collecting payroll taxes in a liability account, and now we're going to pay them, and that will include writing a check generally or having some form of payment that will decrease our checking account. The pay liabilities will change, however, depending on what country we're in, what state we're in, what type of liabilities have accumulated. That will be through the process of the pay employees when we process the payroll, in other words. The U.S. is going to have, of course, the taxes related to federal income tax, Social Security, and Medicare that we are going to keep from the employees and then pay it to the government. And then there's going to be state taxes as well that could be taken out of the paycheck. And of course, we're going to have our employer portion. But in any case, whatever the format is, the concept is that there's going to be some accumulation of taxes that we've either withhold or are incurring as we process the payroll, and then we must pay them at some time. In theory, of course, we're just going to have a liability account and we need to pay it. But we do have to consider what the terms are. When do we have to pay the taxes, for example? So we'll need to enter the time period for paying the payroll taxes. And then we can go down here and check through the payroll taxes that need to be paid. And the time period is going to be important. We got here for the month of January. So it depends on where we are and how big the payroll typically is, whether we have to pay after each pay period, or if we have to be monthly, or if we have to pay quarterly or yearly. But whatever that is, we're going to pay it at some point in time. And when we do, we can set the time frame and then set the check date and then just check off, in essence, the ones that we want to pay. And what will happen is if everything is set up in the system as it should be, then once we set that up, we can then process this, and then QuickBooks will pay off these taxes, meaning write a check for these or process the payment. We have the federal withholding, the Medicare, and the Social Security that we will be working with at this point. And if we have to add any items as we do that, we will. And then we're going to have the separate checks that will be created as we go through this. So now we're going to do this in a journal entry problem in Excel. So remember what we're doing. We're back here in Excel. We're going to be paying off the payroll taxes. If we scroll down here, we see that we have a payroll liability of the $1,598. That is all from the prior month because we haven't processed the payroll yet for this month. We're basically on a monthly payroll process. And we could check that in a few different ways. Note that if we're trying to pay off all of January and not any of February, we could go to the general ledger and just double check that and say, let's go to the general ledger. And we have the payroll liabilities. It's the beginning balance here. So there's no activity in the month of February, which would be here. And therefore, that's the January and before balance that we are now paying off. We can also go back to the trial balance for January. If I went to this first tab, just go into this first tab here. That's our first month of operations, and we have that same amount of $1,598. Going back to the current tab, back to the last tab, trial balance February. And so that's what we're going to pay off. Going back here, back to the left, scrolling all the way to the top, we're going to ask our questions then. First, is cash affected? We're going to say yes, we're paying out of the checking account in order to pay off the taxes. This has a debit balance. We need to make it go down. So we're going to do the opposite thing to it, which in this case is a credit. So we'll copy the checking account. We're going to put the new date. The date will be 2/28. And we're going to put this on the bottom and right click in L18, paste 1, 2, 3. And we could format that as we go. Go into the Home tab, Alignments group, increase the indentation. And then we're going to put the amount. We're going to make the entire amount here. That's going to be the $1,598 that we're going to pay out. credit to the checking account, 1598. And then we're going to debit something, of course, so we'll have a debit. I'm going to use the negative of that number, the plug function, in order to get that. And then we just need the account there. And of course, we're paying off the payroll liability. So we're picking up this account. There's the number. We already know that we're going to debit it, but because we credited cash. But if we double check that, then we're going to say, yeah, this is a credit balance. We need to do the opposite thing to it, which in this case would be a debit. So we'll copy the payroll liability. We will put that on top in L17, right click and paste 1, 2, 3. Here is the journal entry that we have journalized to the general journal. Now we're going to go ahead and post this journal entry to the general ledger. We'll do the step-by-step starting with the payroll liability. Before we do, we will freeze the panes to lessen the pain of posting. So we're up here in AJ1. Scroll up to AJ1. We're going to go to the View tab, and then we're going to go to the Windows group. Then we're going to go to the Freeze Panes, and then we're going to go to the Freeze Panes at the top and scroll back down. So here's going to be our payroll liability. There's our payroll liability right in the middle of the liabilities section. And so it will then also be in the middle of the liabilities section on the general ledger, as it is there on the trial balance. Scrolling to the right, taking a scroll to the right to the general ledger, we see the payroll liability right there. So I'm going to go, so it's side by side. I'm going to go a little bit more, so it's side by side. And we want to be in the debit side. We have a debit over here. We're going to be in the debit side over here in BC16. BC16, we're going to select equals and point to that 1,598, bringing the balance down to, we hope, 0. Does so. And now we will go to the trial balance and see if that 0 is on the trial balance as well. I'm confident it's going to be there. It's going to be there. And there we have it. 0 there. Now we're just going to post the other side. Until we do, we will be out of balance by that 1,589, and we have no effect on net income from this transaction as well. And so we're going to record the checking account. That's the first account up top, and therefore the first account on the general ledger as well. We're going to be down here in AN15, AN15 equals that 1,598, bringing the balance from 106,144 down by 1,598 to 104,546. That same amount then should be found here on the trial balance, as we can see. And we're back in balance, debits equaling the credits. Same $52 to $54 of income, no effect on net income here. And that's because we have, we're just collecting the taxes have been incurred as we process the payroll, and now we're just paying them off. So we have one liability account and one asset account, and not anything else. When we record the expense, note that it would be recorded here in the payroll expense as we process the payroll. One payroll expense from the payroll tax is part of the payroll of the employees. And then oftentimes a lot of firms will break out the payroll taxes that are the employer portion that would also be recorded at the point in time we have the payroll. And then the other side would go to the payroll liabilities. And then now we're paying that off. Now we're just going to check and see what's going on with the financial statements, make sure that they are updating as we believe they should, all automatically as accounting software would do, such as QuickBooks. Before we do though, we're going to unfreeze the panes. So we're going to go to the View tab, we're going to go to the Windows group, we're going to go to the Freeze Panes, and we're going to unfreeze the panes. The posting is done, so we don't need to freeze the panes. So now we're going to see what happened to cash. We did something to cash, so we're going to point that over to the financial statements. We also did something to the payroll liability, so I'm just going to point those over to the financial statements, which are all the way to the right. And then we're going to take a scroll on the way all the way to the right. Just scrolling over, just taking a scroll to the right until we find our financials, those found on columns BW through CC. We see that the cash has been updated. We see that the payroll liabilities have been updated. Note, in accounting software, it would probably just remove any accounts with 0 in it. That's a little bit more complicated. It is possible to do that automatically, but we're going to show the zeros here. So just note that if it just disappears entirely from accounting software, That's what's happening. Do we still have an equal number of total assets and total liabilities and equity as we should? We do. What happened to the income statement? No change, no change. We're still at the $54 on the income statement. That 54 also found on the statement of owner's equity as part of the ending calculation of ending owner's equity to be $144,229. That same amount found on the balance sheet.